Hi, everybody. Thanks so much for joining the FX London Open Breakfast with myself, Kathleen Brooks. Just to kick things off, obviously, we head up to that EU summit. There's an awful lot of event risk around. We do also have some economic data to watch out for today. We've got some CPI data from the UK and some CPI data, from Europe, and also some data from the UK in terms of retail sales data. In the US, of course, durable goods, so some big economic indicators there from the US. So it's an important day, of course, leading up to that Eurozone summit. Of course, the key thing that I think everyone is watching for is the fallout. I've just literally heard again from Germany today. Merkel did not reject Eurobonds outright, apparently, so that's probably about the most bullish thing that we've heard from Merkel. But she said no Eurobonds before joint budget decision. So really pitching Germany against the bloc of France, Italy and Spain there, who are very worried about their sovereignty, but quite happy for Germany to underwrite all their debt. Well, anyway, that's one way of looking at it, I suppose. But a really interesting couple of days ahead. So lots of opportunities, we hope. Let me go through. I'm going to use this as a bit of an EU preview because I'm not going to be here on Friday. So there is going to be no FX London Open Breakfast Friday. Unfortunately, I have a media commitment at that time, so I can't, which I can't change. So let me just bear with me one moment. I'm just pulling up my charts. But just to start with, obviously there's been some quite interesting developments. What are the key things that are moving? Well, the yen has moved very sharply. Yes, now the yen, I'm going to give you a bit of context on this just as my charts load up. So they've been a bit slow this morning, and in fact they're being even slower now. But there's been a couple of things weighing on dollar yen at the moment, and it hasn't quite performed maybe as you would expect. Post the announcement last week that the FOMC wasn't going to do more QE. Well, firstly, that was because on the one hand, yes, the Federal Reserve said they wouldn't do any more QE. However, they did say that if things in Europe got really bad, then they would. So, there's a bit of resting speculation that maybe things in Europe will get really bad post this summit. So there still is expectations of more QE on the table for sure. The second reason is Japanese is domestically in Japan, and this has helped. Remember the way that Japan works. So Japan's just voted to increase its sales tax, which is great when you have a debt to GDP ratio of 22. People have been talking about it literally for 10 years since I kind of first started in the FX market, and it's only just been passed by the lower house now. It's expected to be passed by the upper house. But the problem with it is that the DPJ, so the ruling party in Japan, they had 57 members that defied the government, and they voted against the tax proposal. Hence, there's now a chance that the Japanese government will collapse, putting it into political turmoil, We've heard that before in Japan. But basically, whenever that happens, because the yen is a safe haven, even if it's domestic issues that's causing it, it does cause a bit of repatriation, a bit of strength into the yen, as people do get a little bit worried about these political risks. And we certainly have had to get used to political risks, that's for sure. But now, let me just give you my... Oh, hang on a moment. Sorry. Not quite right. Right, here we go. Now, you should be able to see this chart. This is Euro Sterling, which I don't want, so I'm going to change that very quickly to yen, because just before we get into Europe, I didn't want to miss out on the yen. So as you can see, dollar yen really has fallen here very, very sharply, all the way back down from 80.50. So obviously going through 80, shooting through 80 is a big deal for dollar yen. It's incredibly symbolic. It's like your 130 in euro dollar. It's a symbolic level. As you can see, haven't made much traction below 79.50. Very much stuck in a range, and quite a nice range, we think. Kind of being masked at the moment by some hourly moving averages in terms of the range. The parameter of the range is being flanked by these two moving averages. The 100-day moving average at the top end, just below 80, with the 200-hour moving average, at around 79.50. The other thing to point out, again, you can kind of see it here as well. On a longer term basis, 78.80 seems to be a real, certainly a temporary bottom at the very least. with 80-70 on the top side. And I mean, that really has been the range that we've traded in, and even the moving average is moving that way now. So what can we expect? Well, just taking a look at the shorter term, taking a look at a very short-term chart here, which is the 30 minutes. So what we've seen is a bit of a recovery in euro dollar. It had fallen in dollar yen. Sorry, it had fallen as low as 79.36 to yesterday, today so far. It had been as low as 79.23 yesterday. So what we're seeing, a little bit of a recovery, but it's starting to move into very overbought territory on a very short-term basis. So it looks like potentially we could be thwarted, or the bulls could be thwarted around that 79, 60, 70 area. Obviously, this is a sentiment trade, so it's a good pair certainly to look at post the EU summit, right? So once we digest and find out what's happening. And it's even better, sorry, I've just switched back to my hourly chart. It's even better the fact that it's actually in a range. So you could say that the range is between, say, maybe 79 to 10 on the downside and 80-10 on the upside, just to give yourself a little bit of fungibility room. That could potentially be your range parameters. And what you would do, how you trade a range like this and how you trade a breakout, is that you don't want a range trade, you want to trade the breakout. So what you assume is that if there is some good news, some positive news from the EU summit that's real and not fake positive news, if you see what I mean, it doesn't cause a fake move in the market, then really if it's real, it's going to break above 80-10, and once it does break above 80-10, then you want to buy it and move it higher. Otherwise, you could just be caught up in the choppy action if you know, actually it's just fake good reason or good outcome, if you see what I mean. Likewise on the downside, below say 79, I would probably say 79.20. If there's a very negative reaction to the EU summit, we could see further declines and we could see a bit of a trend lower. However, we'd need to get cut below 79.20 for that to happen. I think between 79.20 and say 79.90, we're really in a very, very choppy zone, and that's, you know, this is what trading breakouts are. Now, there are ways of trading these choppy zones, but I think around kind of big news events, you probably want to be trading, you may want to just have in the back of your mind some sort of strategy, especially because of the way that this summit falls. So Thursday and Friday, the outcome is expected to be a press conference at 5:30 London time, which is 12:30 US time on Friday. I do not believe that for a second. These things always run on. They always do. I think there's a good chance that it won't actually conclude until very late Friday night, maybe even Saturday morning. I've even heard rumours that the Italian PM is going to try and push it out to Sunday night before the markets open. That's a little bit kind of getting too close to the open for my liking. But really, I don't believe that. I believe that you know that they're going to run on. Obviously, they've got a lot to talk about, a lot to agree upon. They've obviously got a lot that they disagree with as well. So I think that what we're going to see is that if anything, there won't be any announcement at all until all of the markets are shut down. So that means the US market as well. So probably not until after, I would say, 10:30 UK time or 9:30 UK time. Sorry, when the US markets close. So that, in my mind, is when, you know, get time over the weekend to kind of think about it, put your order in, and just wait to see where it goes. I mean, really, between now and then, I kind of see us flatlining a little bit. I think there's we've had a lot of, we've had a lot of headlines out already. Remember, all yesterday we had the blueprint. We also had the, what Germany's been saying. But really, what we want to get out of this summit is, yes, we know the blueprint is going to take a very long time. Yes, we know that it's not even finalised yet. This is the blueprint for kind of fiscal, political, and back in the Eurozone. But, the markets aren't naive. They're not expecting everything to be sorted out by Monday morning when the markets open again. What they really want, is just some sign that there's political backing for this fiscal union, and that the two sides, so Germany on the one side and the other, Italy, France, and Spain on the other, actually agree, because that's what really matters. You do not want political split at this critical time in the Eurozone. You want agreement. You want agreement to know where we'll end up, because without that agreement, people start worrying that the Eurozone will tear itself apart and won't be able to go on. And remember, that is the key thing that is causing such bouts of risk aversion in the markets. People are afraid that the Eurozone won't last. That's also going to have a big impact on the Euro. Someone's asked me to look at cable, I will, but I really want to look at Euro first because this is my last one, and I think the Euro of this week, and I think the Euro is going to be the big mover. Now, looking at it from an hourly chart, again, as you can see, hasn't really moved. Very unsurprising around these times, leading up to these big summits, very unsurprising. Take a look at the MACD down there, also flatlining now, just hidden there. It's going to bring that out. We've also got the RSI. So again, suggesting it's flatlining with a slight bearish bias, hitting a bit of resistance here. The low has been kind of down to, it was a very long, kind of almost like a very, very long shadow to the downside, kind of just above 124. Unlikely in our view to cause any, major, we don't believe that we're going to kind of see protracted decline really until we get either some very detailed announcements from this, or until we get some from this summit, or until we actually get the outcome of the summit. So, the market tries to find its equilibrium on Monday. So what about for us? Where do we think things are going? Well, we think that if we get there's two scenarios from this outcome that we think will affect euro-dollar. The first one is going to be, we get some sign of blueprint. There are some signs that we think immediately that maybe the politicians are all in agreement. However, then we get headlines on Monday that suggest that actually they're not. Remember, they're all trying to please their own political voters at home, and maybe when they go back to their own home states, they come up with a different story. That all of a sudden erodes the positivity or the rally the relief rally that we may see, and actually we would look to sell rallies on 126, and then if it gets higher than that, 127.50. That's, so we'd look to sell there with the target of, our first target would be 122.50, the low from earlier this month. And then we'd look for a kind of maybe a breach of 120, potentially to that 118 level, maybe even 115. But that would be kind of our base case, our rough base case for around the next 3 months, so around the third quarter of this year. We would expect that because there would be, we don't actually expect parity anytime soon, because we think that a lot of people who've already sold their euros have done so already. So a lot of big players in the market have done so already. That doesn't mean they'll do more, but it just means there may be less downward pressure on euro. Added to that, if things blow up in the eurozone and we get a very unsatisfactory outcome, then the prospect of more QE from the Fed or the Fed devaluing the dollar will come very much back onto the table. So that could limit downside. However, we do think the euro would be very, very weak. So my targets are, my first scenario is that we maybe spike higher on a relief rally, because we have kind of moved sideways to lower into this summit. So what we could do is see a bit of a brief relief rally up to 126, then potentially to 127.50. We then think there'll be a ton of selling pressure that will push it all the way down back through 125. Of course, 125 being a massive key support level, and then 122.50 would be our second support level. Which is the low from earlier this month, and then we'd look for a breach of 120, so maybe to that 118 level, maybe even 115, but we don't see it going lower than that, certainly not in the next 3 months, okay? The other thing that I would point out as well is that my second scenario is that we don't get that bounce, we just have a negative outcome, and we think we'd see a very sharp decline, probably in the region of 200 to 300 pip move lower on the Monday, potentially getting us way down to below that 122.50 level, fresh year and a half lows. Maybe, then within kind of a few days, we could easily target 120. And again, maybe a breach of there before people, calm down a little bit and think, well, hang on a minute, they haven't allowed it to decline now. Do we now have to wait for the next summit in October? So it's just been, yet again, another bit of can kicking. Now, this is also important for euro sterling, because I do want to show you that. Someone's asked me for my cable outlook. Well, this is important for the cable outlook as well. Euro sterling, we believe the risks are a bit to the downside in cable, largely because we see the prospect of more QE from Bank of England as being less problematic than the Eurozone debt crisis. So again, it's kind of like the UK acting as a bit of a safe haven, obviously because we're now at a more critical level. What we've actually seen is the euro against the pound, perform better than euro against the dollar. Interestingly enough, it could be kind of your relative QE stances, that the UK's QE is quite paltry in terms of market volume, in terms of volume in the market. thus it has less of an impact on sterling than the implicit almost guarantee in the dollar that the Fed will step in with more QE to sort things out if Europe really goes to pot. And due to that, that's what could potentially be limiting dollar strength. So we've actually seen more of a downtrend, as you can see here, more strength in the pound versus the euro than the dollar versus the euro. It does seem to have found, again, some nice support around 79.90, 79.80 is a major resistance level. We need to go all the way back here. Look, 79.60 was the low from kind of earlier May this year. So we're very, very weak in our recent range. So do watch out for that, though, because we are quite weak already. So even though I do think euro sterling's acting a little bit like a safe haven trade at the moment, whereby you sell the euro, you buy the pound, I think that possibly further downside is maybe limited towards 79.50. But if we do see a very unsatisfactory outcome from the EU summit, that could definitely cause a further decline, because I think it would open up a new paradigm for this crisis and a much more worrying one. Because remember, after this summit, there's not another one until October. Looking at it just from a weekly basis as well, as you can see, lowest levels for so long. You need to go all the way back to a monthly chart to get really any sense. And obviously there is a little bit of support here. 77.50 is another one, but that to us would be further kind of declines. Okay, someone's just asked a really good question. Too much news is disturbing trading. There's no big news. Tech driver is technical driving. The main fuel for the leg lower in euro dollar. I think there are. Oh, apologies. 1 second. Something's going a bit crazy. I think that there's. I'll just bear with you 1 moment. I'm just going to turn off my camera. That just went a bit nuts. Not sure why there. I think that I disagree with you that there's no big news today. There's not a huge amount of economic data for sure, but there is a lot of news. Obviously, the news is being created in terms of what's going on in Europe. So it's headline risk, we tend to call it. So you're right. Certainly, economic data are a bit thin on the ground. We have got, obviously, as I said, that durable goods from the US. That will be worth watching very, very closely, because obviously we've seen some weakness in the US data. This durable goods data is for May, and that's when potentially the US economy turns. So I will be watching durable goods very, very closely. And any sign that it's very, very weak, or just bear with me 1 moment. I'll just get you. Durable goods expected to get a little bit move higher. Now they can be a bit funny, but any sign of weakness in them could really scare markets into thinking either the Fed will do stuff or it won't. But either way, I guess long term that would be quite dollar negative. So I think that technicals are having an impact, as I said. But right now we are trading within a range, so there really is a limit to kind of what technicals can do. So always find your range. But as I said, euro sterling, a bit more directional for sure here. Here you can see the 100-month moving average here, which is the yellow line on this chart. That is 79.80 is coming in at, or 77, sorry. May be tested if we get a very bad outcome in this EU summit. Now, someone's been very patient and waited for sterling. I hope we're still with me. I do apologise for the delay. But basically, cable has been kind of jostled around a little bit by, firstly, overall expectations of the EU summit. And secondly, economic data coming out of the UK, some government spokespeople from the UK. We had Mervyn King and others speaking yesterday. And just overall kind of dollar positioning. And as you can see here, pretty similar case to euro, stuck in a range. And we think, what will cause that range to move higher is going to be, sorry, I'll go back to the daily chart, very much within its range. Again, nice range being framed there by some moving averages. So 21-day moving average at 155.30, say just above 155 on the downside, with 157.50 capping upside. We're weak within that range at the moment, as you can see. We did see a bit of recovery yesterday, which came on the news of a few different things, and obviously the market doing well. But the pound has actually been kind of outperforming, largely because of those inflows into euro sterling as well. So that could potentially protect sterling, protect it certainly by above that 155.30 level. But again, for it to really rally, and again, again, it's quite a similar range. If you get, if we get some good good news from this EU summit, you may see, you may want to you may want to trade a breakout, because we think that would be very positive for, cable to an extent. Obviously, you may see some unwinding of euro sterling shorts as well, which would limit upside, but you may want to kind of trade a breakout above 157 to maybe target kind of 158.50, which is this kind of convergence of moving averages, daily moving averages up here. Likewise, if you get very negative data, you may want to, wait until we get to that kind of 155.30 level. Because as I said, the reason why we say that, people say, well, oh, you're missing all this profit. Well, it's because generally within that range, it's considered quite choppy. So this is just a kind of a risk thing and, good risk management technique, really. 156.50, someone has mentioned, that does seem to be a top, very temporary top. As I said, there was some strength in cable yesterday. That has been, let's go back actually to our daily, because you can really see it there. 156.50 is important. So just below kind of what you mentioned, because it is this 200-hour moving average, that certainly caps the upside. So as I said, looking very, very similar to what we've seen with euro, in the sense that things are flatlining. So that is also a key level to watch, certainly on a more short-term basis. And then on the downside here, so as we've seen kind of, the sterling come off quite sharply after making repeated attempts at 156.50 level, really highlighting just how, how stiff that resistance is. 156 and then 155.90. That's the more shorter-term range. So it's always good to do that. Cable, cable is certainly coming under pressure this morning. We've seen kind of a bit of mixed. We've seen a bit of mixed action on what's been going on. So we need to kind of watch that. Someone's just said a bearish cross. Well, not quite yet. We need to wait for that, because as you can see, these are the moving averages. If we get maybe the 100-day cross below the 55-day, that would be fairly bearish. But right now they're kind of, they're not really telling us anything, the moving averages or the MACD, just saying that, we're slightly a bit lower. But I believe that we're trading within a range because of the unclear fundamental backdrop. As I said, risk, the euro is getting sold, it is getting sold. Any touch of a rally towards 125.50 or 125.25, even above 125 at the moment, is being sold off. But we have heard that there is some demand for euros around 124.90 from some Asian buyers, so that could keep things a bit weak, a bit choppy around there. And it's this kind of very short-term, narrowing of ranges whenever that happens. So as we've seen here, very narrow range. Now, if we just go back, for the last kind of from last week, wider range, as you can see here, really, really narrow range. When you see narrow ranges, it suggests that the market is kind of winding itself up a bit like a spring, ready to pounce on the next bit of kind of bad news, if you like, or good news. So break either up to the upside or to the downside. To understand which way it's going to go, we're going to have to digest what's come out of the EU summit. So for that, I would recommend you follow us on Twitter at ForexCom. And we keep you up to date with all the latest comments and everything else. Obviously, for those of you who trade with us, you have Forex Insider as well. And also, you can check our website out on the research under the latest research tab at forex.com. Someone has asked a great question about dollar CAD and about whether or not dollar CAD is the best thing to trade on the release of U.S. durable goods. It certainly is a good thing, because remember, U.S. economic strength is very good for Canada. U.S. economic weakness is bad for Canada. So what you can sometimes see is good data causes dollar CAD to fall, weak data causes dollar CAD to rally. So dollar CAD has been certainly supported on the downside around that 102.30 level. That has been very, very good support. What we've actually seen here is the CAD, along with kind of the Aussie and the Kiwi, had done fairly well yesterday and recovered quite a bit. We've seen that recovery stall a little bit, and we're seeing the dollar really gain some ground here now at the European Open. and we're getting that is being reflected in dollar CAD. So again, there is some resistance. We are moving into a resistance zone, 102.6 or 102.70, and then 103. There's some key levels to watch out for on the upside. They could certainly thwart the bulls. And, obviously once we get the durable goods order, it's for economic data, it's quite good to kind of narrow your time frames a little bit. We'll take a quick look at the 30-minute chart just to get some good levels. What we have here is 102.90, that's a really pivotal level, as I mentioned above, and then kind of 103.15, another one. So some key levels to kind of watch out for. I'm going to show you as well a point and figure chart, because I think that's good. Now, someone's just questioned whether or not US durable goods are even a key driver of the market. Well, of course they're less of a driver of the market because we have the European crisis, and added to that, we've also got, the US is no longer a massive, manufacturing base. However, I think in the last year, manufacturing data has certainly become more important. It drove the recovery at the beginning of this year. Added to that, we've also seen, there is extra focus now on US economic data. So what we're seeing is the market, the main driver for the market is a kind of key, there are a few key drivers of the market at the moment. Obviously, what's going on in Europe, but also the state of the U.S. economy. And durable goods are still considered a good precursor for GDP and a bit more timely than GDP, so it is worth watching. Okay, just bear with me one moment. I'm just going to bring up my chart. So this is the intraday point and figure chart for dollar CAD. As you can see, nice bottom there in place at 102.35. Your first level of resistance, 102.60, and then we'd probably be looking at kind of 103 or 102.95, just below 103, and 103.20. So you've got a lot of resistance on the upside. So there is a lot to kind of do here. So this is dollar CAD, not the dollar index. And because we don't offer the dollar index to trade, I'm not actually going to be able to look at that now because it is it is 8:30 just, and my machine's getting a little bit crazy. I'm going to have to take off that. Apologies for that. But everyone, thanks so much for joining. I hope you found it useful. Added to that, I am going to not be around on Friday because I do have a work commitment that I can't miss. And thanks very much for joining, and hopefully you can join me on Monday as we round up what goes on in the EU summit. Thanks, everyone. Bye-bye.